The MPC noted that since the last policy meeting, external headwinds have intensified, though the successful completion of trade deals augurs well for the economic outlook. Overall, the near-term domestic inflation and growth outlook remain positive. Headline inflation during November and December remained below the tolerance band of the inflation target. The revised outlook for CPI inflation in Q1 and Q2 of next year at 4% and 4.2% respectively, revised slightly upwards, continues to be benign and near the inflation target. The slight upward revision in the inflation outlook is primarily due to increase in prices of precious metals, which contribute about 60 to 70 basis points. The underlying inflation continues to be low. On the growth front, economic activity remains resilient. The first advanced estimates suggest continuing growth momentum driven by domestic factors amidst a challenging external environment. The growth outlook too remains favorable. Based on a comprehensive review of the domestic macroeconomic conditions and the outlook, the MPC therefore was of the view that the current policy rate is appropriate, and accordingly it voted to continue with the existing policy rate. I will now dwell on the assessment of growth and inflation. First, growth. The Indian economy continues on a steady improving trajectory, with real GDP poised to register significant higher growth of 7.4% this year as compared to the previous year. Amidst global headwinds, private consumption and fixed investment both supported growth. Net external demand, however, remained a drag, with imports outpacing exports. On the supply side, growth in real GVA on the back of a strong contribution from the services sector and revival in manufacturing activity is estimated at 7.3% this year. Going forward, economic activity is expected to hold up well in the next year.